Hey traders, Siam here. So it's a bit late, the kids are asleep, so I've got to keep my voice down. I had a question. In fact, every now and again I get this question, which is, can you make cash flow with a small account? And my answer has always been yes and no at the same time. So yes, normally if you are with trading, it's pretty simple. If you ever want to increase your income, or if you want to increase your ROI, 9 times out of 10 you have to really increase your risk. It's pretty as simple as that. You can do all sorts of fancy things to work around it, but ultimately for 99% of the people that do trade, if you want more ROI, you've got to up the risk. So what I've always done is I've always split my cash. As in my trading cash, I've always had, let's say, a proper trading account over here, and then a risky account over here. So most of you probably heard this. I call it my DIY pension trading account, and over here I've got my testing account. And I call it my testing account. It's basically my gambling account. And what I used to basically do is put in, say, 5k. I'd then run that up to 50k, take 45 grand out, leave 5 grand in it, and then start again. But you have to be aware that I was basically going anything from sort of 10 to 50% max risk. I was basically going all in. I'd be waiting for like the best damn setup you could ever ask for, or even during crashes, and I'd load up. However, relatively recently, there's a thing that's just come out, that's been rolled out across the whole of the Europe, which is called MiFID II, which is a financial regulation sort of basically they're updating the regulations around all sorts of finance, but also to retail trading. And basically they sort of want to try and save or protect traders, as in retail traders, because most people just get absolutely screwed. And what they've done across the board is reduce the margin. So what this means is I can't trade this account anymore, as in this testing account like I used to, simply because I cannot place a trade with all with a huge pounds per pips, etc., because it would just eat up all the margin. And what happens? This is one of the testing accounts, for example. What happens is when you go below 50% usable margin, it will not let you place any more trades. So here you can see I've got 5% usable maintenance margin, as in, so long story short, when you go below 50% usable margin, you can't place any trades. And so what's happened is that there's been loads of occasions where, like over here, we've got all of our orders. There's been loads of occasions where the trade's going in our favor and more entry orders want to kick in, but if you're in a state of a bit of a margin call over here, it's not proper margin call, but if you go below 50% and a good entry or any entry order kicks in, it won't activate. It will say your account will just say you have no margin, and it will just delete the entry order. So I've actually lost out on a lot of profit by not having enough margin. So you simply cannot trade a testing account like the good old days, which pretty much sucks. However, I thought with all these new changes I'd have a little play around, and I've been trying to basically figure out how I can game the system again to try and have another testing account, but obviously not as crazy. And I think I'm just going to have to do slow and steady. And so what I've been doing is a bunch of the following. So in fact, recently I've been doing a little bit more than 1%. I've been doing 2 to 3%, but it just doesn't work, as you can see at the account at the moment. So the account's running in a lovely profit, but on this account at the moment I've been risking 2 to 3%. But what this means is, because I am risking 2 to 3% max risk per trade, I'm just running out of margin, which means I won't be able to set up, any future entry orders that want to kick in. They won't be able to. So yeah, you simply can't do that if you want to trade, I guess, this amount of trades like I'm doing at the moment. And I'm not exactly going in massive pounds per pip, as you can see. So what you need to do is 1% max risk, and then no more than 4% exposure for a pair. And what I'm also doing is doing it sort of a normal setup followed by a lowball setup close to the stop. So if we have a look, Euro Kiwi, you can see I've done it here. So let's have a look at Euro Kiwi. That's very handy. So here you can see I'm trying to short this market. I've got the limits down here. So here's where I want to put my normal entry. So I've put it, just below this double O, sensible stop loss way up here above the 5-0, above that high. I've got about an 80 pip stop, okay, along with something like a 240 pip, limit. So what is that? 240 divided by 80. That gives us 3R. Yeah, so I like placing 3R trades at least, if not more. However, what I'm also doing, what could happen is I get activated, comes down, and hits target, and yeah, great, I've got a 3R trade. But every now and again, and it doesn't happen often, but sometimes it does, and when it does happen, it's absolutely gorgeous. The market will go against you. You may have a little random spike like this, or something like this, and it pushes into liquidity, where entry orders and stop losses lie. And if my stop loss is in a sensible position over here, what I want to try and do is get in as close to the stop as possible. So I've put another one here just below the 5-0 level, but with the same stop. So if you can look over here, we have a 30 pip stop, but with the same limit. But so you'll end up having a 2.8. So with this one, 286 divided by 30, 9R, basically 9.5R. And so every now and again you'll get a 10R trade. So that's what I'm doing at the moment. Basically, as you can see here, let's go to Telegram. So those of you who've been in for at least a few months now, you would have seen that I've been doing a lot more support and resistance trading, which is actually my bread and butter. Yes, I've got, yes, we have access to the trendy jibe and 8 EMA bounce and all that, but really, over the years, every time I've looked at things, it's always been my support and resistance which have done the best. And I think it was the day before my birthday of some sort. What date is this? It's not saying February. Yeah, it's not before then. I think it was around the 20-ish of Jan or 24th of Jan sometime. I started texting out all my support and resistance stuff again, which I haven't done for a while actually, I guess. So I can't find it here. It's 4th of Jan. Okay. Yeah, I remember this. Okay. These are the punts, really. Kicked out of... Okay, so it looks like I was doing it slightly earlier in Jan, so let's call it roughly the, 10th of Jan. So what we can see here, it is, if we do 10th... Oops, that's Feb. So we've been going for a couple of months doing this. 10th of Jan... till now. Let's get the spreadsheet done. Run report. And yeah, it's done rather nice. Open. Oh, I've got some spreadsheets open already. So okay, here we go. And yeah, this random account started around $3,000, as you can see. So I think all of this stuff was yeah, it was around 3 grand. Basically, I started off with 3k, and as you can see, I've been growing this very gently. It says here 3,600, but if you look floating profits, we're around sort of 4,000 at the moment, but because we've got some trades in profit. But yeah, I've basically grown it $1,000 in what was that, $1,000 in, call it 2 months basically. So which is alright. I know I've been taking a lot of risk on this one, so $1,000 divided by, yes, 30% in 2 months, so 15% a month, which is unsustainable, as I said. So you need to look at the risk. So, well, in fact, I've already done most of the work here, so I'm just going to get so yeah, if we have a look at this, and basically with my support and resistance, we tend to get these average stats. So 35% hit rate roughly, average 3R at least. It normally averages a bit more because I do take a fair few. I very rarely take a 2R trade, 2.5R sort of every now and again, but it's normally way above 3. So let's say I have 20 odd trades. We've been averaging about 10 trades a month. So with something like this, you get minus 13 in terms of the losses, 21R in terms of the winners, 8R net, which is nice. And then over divided by all the trades, it gives you your expectancy of 0.4R expectancy, which is great. I mean, if you look at the turtle traders, they made hundreds of millions of dollars over decades, and they only had a 0.2R expectancy. So yeah, what this basically means is that for every pound you risk, you're expected to make your pound back plus 40p profit. But let's just say you did do 2 months worth, and I don't know, you had a $3,000 account just like I did, and you're risking, let's say 1%. So what is that? 30 quid of a $3,000 account. Yeah, 8R of that net. So 240, isn't it? 8 times. Sorry, what am I? 8 times 30. Yeah. Divided by $3,000, it gives you 8%. Yeah, so roughly in line what I've actually done. Now let's take this one step. Oh yeah, so if you then go to the risk calculator and put these stats in. Now let's say you do 10 trades a month. That's 120 years. So times it by 10. So you're doing 1,200 trades a decade. I like to do my stats over a decade. With this, so basically if you put in 10% over here for your risk of ruin, you're basically guaranteeing yourself to have 100%, guaranteeing to have at least a 10% drawdown. That's fine because you're going slightly large with this one, but only an 8.6% chance of blowing your account. If you go in at, say, if you're accepting maybe a 20% loss, you only got sort of 30% chance of that happening. Or what about 25% loss? Very slim. So you have a sort of 5% chance of having a 25% drawdown if you were to deploy this sort of cash flowing method, but you're not going to blow your account, as you can see here. And what about 30? Yeah, so basically if you can stomach a 25 to 30% drawdown, but no, you're never going to blow your account because the maths is on your side because it's a positive expectancy system, you're golden. And then when you put this into the Monte Carlo system, I mean, I found some random one online here, and all of this just corroborates my rough, yeah. So here you can see over the long run, over 200 trades should do pretty darn well. So yeah, so 200 trades is just over, in fact over 120 takes you about, yeah, should make 6 odd grand over. Yeah, I don't particularly like this Monte Carlo system, so let's get our own one out, and here you go. Every time you do it, over 500 trades, let's just call that 5 years. Yeah, that makes sense. After 100 trades over a year, it's 22%. Yep, that's fine. So obviously these returns are going to be a lot less than what I've been doing because I've been doing 2 to 3% max risk. I mean, as you can see, if I just put 2% in, the maths goes nuts. And then after, say, a year, you basically double your money. But look at the drawdowns. You can have some mighty drawdowns. So yeah, let's stick to 1%. I'm going to be changing my position sizes from now on down to 1% for this little testing account. But yeah, it's all profitable, which is fun. Yeah, and as you can see, you should have lots of little wins, and every now, basically you should be having lots of little losers, and every now and again a big win. As you can see, my winners are nearly always lots of little losers and then a big winner. And that was probably when I was over-egging it. So yeah, that's about it. Oh no, sorry, I haven't finished. Oh yeah, so what I did is here, I've just expanded this a little bit to show you what reality could look like. So over about 40 trades, so let's call that 4 months, with 35% hit rate, it's going to look something like this. You're only ever going to lose -1R, so it's -26R there. But because we're doing this sort of double entry, low ball entry method, every now and again you're going to get a 10R trade. So it's going to be something like this, a whole bunch of 3Rs, maybe 1 4R, 5R, 6R, but you'll definitely get a couple of 10Rs. And what that does is that so you end up with 62R there, 36R net, 0.9R expectancy, and your average triple R is 4.42. But again, if you wanted to put this in simpler chat, let's say you did have a $3,000 account, you're risking 1%, so again, $3,000 times by 0.01 or divide it by 100, doesn't matter, 30. So that means you're risking 30 quid a trade. Let's say you do average over, say, a 4-month period, this. So what this basically means is you're going to be losing 26R, or times 30, basically, because that's what you're risking. So you're going to lose 780 minus 780, but you would have made 62 lots of 30, 1860 minus 780 equals 1080. So yeah, even with risking just 1%, you should be looking at it to make sort of about $1,000 every 4 months or so, which is not bad actually. That's 30 odd percent in 4 months. But obviously, I have to go back to the very beginning of what I said. If you want more ROI, you have to accept the risk, and this is the risk. Not this one. This is the risk. You need to be able to stomach at least a 25 to 30% drawdown, and that's pretty hard. It won't be hard. I mean, if you look at my account here, you can see I've done that. So basically starting around $3,000, I lost 300 quid on this one, so I must have been risking about 3%, or no, way more than that. If I had a 288 quid loss, 288 divided by $3,000, that's a 10% max risk trade there. I've done that a couple of times. So really, I think, my proper trading started around here, probably, there. So you have to be able to stomach the drawdowns. Anyway, in summary, blank page. Hopefully that makes sense. I'm going to continue trading this account here, and what I need to do, I'm going to be creating a public landing page and just posting all these results. So yeah, hopefully these trades carry on doing what they're doing. So toodaloo, bye bye.